Most sole proprietors think that if they're not working, they're not getting paid. And I know this feels true because you are the only one in the business producing the work to generate the revenue. But that's not actually how a business is supposed to work. I talked about this in another video, that even as a sole proprietor, you do need to separate yourself from the business, because your business should be structured in a way that pays you consistently, whether you work 20 hours a week or 60 hours a week. So if that's not happening right now, it's not because you're not working hard enough. It's because of how the money is set up inside the business. So that's what we're going to be talking about in today's video. But before we get into that, hi, if we've never met before, my name is Janet Mercredi, and I help Canadian small business owners make sense of their numbers so they can make better decisions about their time, their pay, and their profit. And on this channel, we talk about all the money stuff that most small business owners were never taught. Hey, it's Janet here. Sorry to interrupt the video, but I wanted to make sure you knew about something that I created just for you. Because I know a lot of small business owners are working really hard and they're making sales, but they still feel like there's never quite enough money left over at the end of every month. So that's why I created a free profit maximizer calculator that helps you see how your business is actually set up financially and whether it's actually working for you or working against you. You can download it from the link below. Now let's get back to the video. So this is a big one for sole proprietors, and we need to clarify how to pay yourself when you're a sole proprietor. So the first thing is we need to clear up the misconception. If you are a sole proprietor in Canada, you can't put yourself on payroll. You can't issue yourself a T4, and you can't run payroll deductions for yourself, right? Because all of the profit from the business is considered your personal income, and it's going to get recorded on your personal tax return. So from a tax perspective, there's no such thing as a salary for a sole proprietor business owner. But from the behavior and cash flow perspective, you still need to act like you were on payroll. And this is where most small business owners who are sole proprietors get this wrong. Most sole proprietors pay themselves like this. All the money comes into the business account, right? They pay expenses, they pay supplies, they pay bills, and if they're lucky and there's some money left over, then they transfer money to their personal bank account. So their pay is basically what is left over at the end of every month. So that means some months you might pay yourselves a lot. Some months you might pay yourselves not a lot or even nothing at all. But it definitely means that taxes aren't being set aside and your cash flow is always stressful because you're never going to know what you can afford personally. So that's not really paying yourself first. That's just taking leftovers. So at this point, if you're still thinking that all of that money coming into your business is yours, you got to change that line of thinking. Again, that was the other video that I did where I talk about separating our mindset from us and our sole proprietor businesses. So instead, I want you to start thinking about it like this. Your business earns money. Your business then pays you, and then the business pays its expenses. And most small business owners do the opposite. They earn the money, they pay the expenses, and then they hope that there's something left over for them. But if you're always paying expenses first, you will always feel underpaid as the business owner. So here's what we want to do instead. We want to decide that the business can afford to pay you and then build the expenses around that number. So that doesn't mean you're going to ignore your bills or your expenses. That's not what I'm saying at all. But what I am saying is that as the owner pay, we're not going to treat it as an afterthought anymore. Instead, we're going to make the owner pay part of the plan. So as a sole proprietor, I recommend that you pick a consistent amount that the business can afford to pay you every single month or every 2 weeks. And you're going to transfer that amount from your business bank account to your personal account on a regular schedule. So depending on your business and without knowing your numbers, maybe it's $2,000 on the 1st and the 15th. Maybe it's $5,000 once a month. Maybe it's $1,000 once a Friday, right? Whatever it is, we want to create the habit, because in creating the habit means that we're then creating our consistent cash flow. So at this point, I'm not as concerned about the amount that you're consistently paying yourself. I'm more concerned with you creating the habit so that you have that consistent cash flow, so that you can physically see that your business is supporting your personal life. And there's another really important thing that sole proprietors need to understand about paying themselves. How much you transfer from your business bank account to your personal account is not what you are taxed on. Instead, you are taxed on the profit of the business, not how much you pay yourself. So for example, if your business makes $100,000 a year in revenue and your expenses are $40,000, then your business profit is $60,000, okay? So that $60,000 is what gets reported on your personal tax return as business income, regardless of whether you transferred $60,000 to yourself or you transferred $30,000 to yourself. The number doesn't matter. This is why planning for taxes is so important as a sole proprietor, because the CRA is taxing you on the profit of the business, not on how much you're taking out in owner draws. So paying yourself is a cash flow decision, but taxes are based on the profit. And those are two different things, okay? The other mistake I see a lot of sole proprietors, small business owners make is that they look at their bank balance and decide if they can pay themselves based on what's sitting in there today. But your pay should come from a plan, not from the balance of your bank, okay? So you should roughly know how much that business makes on a regular basis. What are the expenses, right? How much are you paying in expenses every week or every month? What you need to set aside for taxes, what you want for profit and for savings, right? And what the business can afford to pay you. In knowing those numbers, that's how you're going to start taking control of your money instead of reacting to it all the time. Now, if you are wondering how much should you be paying yourself, that's where percentages and allocations come into play. Okay, I talked about this very topic in another video where I walked you through how I set up the profit allocations for sole proprietors and how to divide up your income properly. And that video will help you figure out how much should go to your owner's pay, your taxes, your expenses, and especially profit. So to recap our video, what did we talk about today? We're talking about if you're a sole proprietor and you're wondering how to pay yourself, here's the simple version. Number one, you cannot be on payroll. Number two, stop paying yourself whatever is left over. Number three, your business earns money, your business pays you, and then the business pays expenses. Number four, pick a consistent amount and pay yourself regularly. Number five, how much you should pay yourself is not what you are taxed on, because you are taxed on profit. And finally, number six, your pay should come from a plan, not from whatever is in the bank account. Because at the end of the day, your business should pay you. Otherwise, you don't really own a business, you just own a job. If you want help figuring out if your business can actually afford to pay you and how your numbers are structured, I've got a free profit maximizer calculator below that walks you through your revenue, expenses, and profit structure. So that's what I have for you in today's video. If you like what you're hearing, I encourage you to like and subscribe to my channel so you don't miss any upcoming videos. Again, my name is Janet Mercredi, your Profitable CFO, and I'll catch you in the next video.